Good morning from Los Angeles. A beautiful day. Not in the markets. So, welcome to Trading with Sergio every Monday, 10 a.m. Pacific, 1 p.m. Eastern, followed by Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Those are the two live streams I'm doing currently for the foreseeable future. And I do a members only live. If you choose to become a member and support the channel, I do a live stream for the members only every Wednesday, and between 3 and 5 Pacific time. So, what's happening? Why am I wearing a red hat? Well, red hat. From now on, I'm going to wear a red hat when the market's down, when I'm doing live, and I have a green one at next to me. So if we do get a massive rally and turn green, red to green, I'm going to switch it to the green hat. What do you guys think? Red, green, right? Okay. So the volatility is continuing. I will post the link actually shortly. Do some Q&A, answer the questions, look at some charts. I started putting on some trades today. I was about 90% cash, 85% cash. So I started deploying some funds, allocate some funds to things that I really like at these levels or lower. I'll share those with you every Monday, Wednesday, Friday. I'm posting all my current positions on the community page of the YouTube channel. So if you're not a member, you can follow them that way. Again, none of this is trading or financial advice. You have to do your own due diligence. If you do tag along, and if things go sideways, and I'm totally transparent, there are winners, there are losers. To me, the important thing is trading my equity. If I have $1 more than last month, I did okay, even if the markets are tanking, which they are kind of today. So what are the reasons for that? Well, there are a couple of reasons. Over the weekend, the rhetoric between the two, last Power Hour, please go check that out. I had a pretty good analogy, I thought. So we have these two kids in the schoolyard. The other kids are watching. The two kids in the schoolyard are China and US. Elementary schoolyard. They can't hurt each other that much, really. So one is yelling to the other one, "My dad's bigger than your dad. He's going to come beat you up." And the other one is coming back and saying, "Hey, not only my dad's going to come to the fight, I'm going to bring my brother, and then those two are going to kick your dad's ass." This is where we are. And we have declared, at the moment anyway, we have declared a global economic nuclear war. Markets are not liking it. Besides the stock market, bond markets are definitely not liking it. Now there is also very strong rhetoric from President Trump towards Jay Powell, the chairman of the Federal Reserve, who he actually appointed last time he was president. But now they're not seeing eye to eye. The Fed is saying we're data dependent. The tariffs may be inflationary. I have actually pretty strong opinions about that. I think tariffs may be inflationary. I'm not really convinced that they will be. I think more than inflationary, I think there will be a price shock the first year, obviously, if the tariffs stay. That's under the assumption that the tariffs stay the way they are. So if the tariffs stay, for example, if we're buying Nikes from Vietnam and we have a 10% tariff, okay, well, the shoe is going to go up by 10%, or Nike is going to eat that 10% and not raise prices for the U.S. consumer. Well, we all know what the corporations do. Corporations raise prices if their costs go up, period. Well, this is a cost. So let's assume 10% tariff on Vietnam. The shoe is made in Vietnam. You're going to get the Nike Air instead of $100 or 110. So yes, there will be an initial shock, the first year especially, there will be, you can call it inflationary, but it may be transitory because we don't know the nature of these tariffs. They may be here today, gone tomorrow, like President Trump announced a 90-day delay, which is July 2nd, by the way, 2 days before Independence Day. That may be the real Independence Day. We don't know because, April 2nd was supposedly the Independence Day, according to the new administration. When they announced it, there was, stuff floating around. Oh, they're all coming to the table, this and that. I haven't seen anything. The point is, this is not sitting well with the people we're putting the tariffs on. So when you have these two kids going at it, who knows when it ends. But the other thing that's going to happen is that, I talked quite in length about this last Power Hour. So if you did miss it, it's from Friday. It's on the channel. Please go check it out. I talked in detail about it. I don't want to go into it too much today. Let's do some trades. Let's do some transactions and try to make some money today, as opposed to going to the same thing and me repeating the same thing. China over the weekend said, well, Trump basically is saying that, pick a side to the globe, to our other trading partners, right? He's going like, you have to pick a side. You're either on our side or you're on their side. Well, China is not liking that. China is like saying, well, if you do make a decision like that, because we're trying to squeeze China really, really hard here while their own domestic economy is kind of struggling as it is with the real estate bubble that burst a few years ago. China has problems. I mean, I'm not going to deny it. And now we're going at it. And I don't see a winner out of any of this, to be perfectly honest, long term especially. But what's happening now is that foreigners own close to $18 trillion in stocks and about $10 trillion in bonds. So the key is the bonds. They own those IOUs. The bond market, first of all, is not liking what's happening with Jay Powell and Trump. They're going like, well, if Trump gets rid of Jay Powell, and I think the bond market's going to suffer. To be perfectly honest, I think the Fed has done a decent job, with the exception of them being very behind the curve, very much behind the curve when the pandemic happened and we pumped in 7-8 trillion into the economy and then inflation came back. Now they're trying to put the genie in the bottle. It's not an easy thing to do, but they did the right thing. They raised the rates. Well, the bond market now is raising rates some more on its own. Nobody can control the bond market. The bond market is into the trillions. Fed cannot control the bond market. U.S. administrations cannot control the bond market because there are so many players, it's so large, a lot of leverage going on as well. There's a lot of carry trades that are going on. So, yeah, bond market's not liking what's going on. So bond market's been selling off. When the bond market sells off, that means interest rates are going up. Well, we have close to $9 trillion coming due this year in maturing bonds that we had issued 5, 10, 20 years ago. The average interest rate on those IOUs is about 3.5 at the moment. And if the rates stay where they are, they're going to be all refinanced at a 4.5% plus level. That you might say, well, what's the big deal? It's just a single percentage point. Well, single percentage point on $37 trillion worth of debt is a lot. So we're at the moment we're paying the world or the whoever is holding these IOUs, and 30% of it is the globe. The foreigners, Chinese, and Europeans and Japanese are the largest holder, about 1.2, I think 1.3 trillion dollars. Foreign sovereign wealth funds. So they buy these bonds. Well, if they don't buy these bonds that are going to be issued now, they may require a higher interest rate. Well, the bond market is seeing this. Bond market seeing, first of all, tariffs being inflationary. And bond market decided, okay, well, if this is inflationary, Fed can cut all the rates they want. we're going to keep raising the rates. And that's what's happening specifically today, a massive move up in the bond market. And so, you know, the thing that we're not, I think, understanding, last but not least, is that, see, this would have all worked out, this kind of my way or the highway kind of a situation that we're playing with. Because look, we are the consumer of the world. The world needs us. But if we do go in a recession, consumers going to slow down spending. In fact, you know, may go backwards, and we're not going to buy enough, right? And okay, but then what's happening is that we have all these IOUs out. If we didn't have the 37 trillion in debt, national debt, this would be manageable. But having the 37 trillion in debt, basically having your future in the hands of foreigners to the tune of 30% is not a good place to be in. So what can happen? Well, I'm not sure. I don't think it's going to happen. But the reason interest rates are spiking are because there could be a concerted effort of getting out of dollar-denominated assets. Well, how's that going to be? The world comes, sells bonds. Well, if bonds are sold, remember my theory of supply and demand? Okay, if bonds are sold, prices go down, bond prices go down, that means yields go up. On this national debt yield is going to go from 3.5 to 4.5, maybe 5%. That's trillions of dollars. Last year, FYI, we spent $1.2 trillion on interest servicing costs of the debt. 1.2 trillion. Can't we use that 1.2 trillion to do something really good in this country? Of course we can. But well, if we do refinance all this debt coming up at 5%, that is going to go up to 1.6 trillion just for 2025. So 1.6 trillion, by the way, is 2.5 times our defense budget. It's about 2 times Social Security. And yeah, that's where we are. We put ourselves in a box. So Trump administration is going, hey, man, my way or the highway. You need me more than I need you. I'm like, I'm not sure about that. You know, Trump administration wants a strong dollar. Dollar is collapsing. Okay. Trump administration wants lower interest rates. President Trump, Scott Bessent, please, you guys are smart people. Lower interest rates and higher dollar doesn't work. The other thing that's happening is that assets are being sold in stocks and all dollar-denominated assets. That's why we're going down in the stocks. You know, the world is getting rid of stocks and their bonds to a point, certain degree. They can't get rid of the whole thing, obviously, and they won't. But when that happens, well, that dollar assets that are being sold in dollars, right? What happens? The money has to go back to their country. It's going to go get converted into yuan. It's going to get converted into Japanese yen or euros. Well, that means dollars are being sold, and dollar is literally collapsing. It's just the value of the dollar. So you have all these things, and at the same time, President Trump yelling to Jay Powell saying lower interest rates. You know, you're making this politics out of it. At the same time, tariffs are in. I mean, I'm not sure what the policy is here. Seriously. The policy, it looks like just hodgepodge. We're putting some stuff together and then let's see if it works, or throw spaghetti on the wall and let's see if it works. I'm like, no, we are dealing with really serious stuff here. We could be structurally hurting the economy here for a while. And there is no turning of this. I mean, other than saying, okay, this is enough. Cooler heads prevail. We want lower interest rates. How do we achieve lower interest rates? Well, if we go in a recession, rates are automatically going to go lower. And inflation is going to go down if we go in a recession. So if the whole idea is put us in a recession, slow the economy down, slow consumer spending down, lower inflation, lower interest rates, okay, that's one way. But you can't have tariffs on the other side to do that. You just can't. It doesn't work like that. And, you know, this is what I'm seeing. And I'm more worried about the bond market than the stock market. The stock market is the stock market. Look, stock market is going to have headwinds for the next 2 quarters, at least. All the earnings on the S&P 500 are out the window. estimates were for $270 for SPX, which is about 5,100 at the moment. Well, rates are going up at the same time, which is bad for the PE that we're going to slap on those 270. Well, that 270 was cut to 255, and I'm pretty sure it's going to get cut to 240. We have a massive earnings season coming out. All the Mag 7, all the S&P 500 stocks in the next 2-3 weeks, they're coming out with earnings. Are they going to pull guidance? Are they going to say individually things? Well, I'm pretty sure every earnings report is going to be full of tariff, right? Because that's what the excuse is going to be from small to major megacorps, right? Okay. So yeah, we have headwinds for the next couple of quarters at least. And if the earnings estimates on the S&P 500 keep getting cut, let's say we cut them to 240 next, right? So let's slap on at 240. 240. That's $240. Let's slap an 18 PE on it. We're at 4,300. We're like 5,100. That's another about 18 to 20% from here. So that's where we are. Now, you're going to say, well, why don't you slap a 21 PE on it? Well, let's do that. Let's slap a 21 PE on it. But when the rates are going up, PEs go down. That's what's happening. So that's why we're in kind of this box now. So 240 times 21 is 5,000. Let's say right around 5,000. We're 5,100. So that's where things are at. I mean, I honestly see the market pricing in a recession, and we're going down to 43 to 4,500 on the SPX, and then cooling off there a little bit. And from peak to trough, so that's 1,800 points. That's about 30% haircut. On the SPX, I'm pretty sure it's going to be about 40% on triple Qs or NASDAQ. And yeah, your portfolios are going to get decimated. I mean, how do you protect yourself? You can hedge with futures, you can short futures, you can buy puts, you can do all kinds of things. But if your portfolio is full of high beta stocks, I mean, and the market goes down 20%, your stock has a beta of 3, let's say, it's going to go down 60%. And a lot of stocks have already gone down 50, 60%. So that's where we are. I honestly don't see the rhyme or reason of what's going on here at the moment. I'm trying to read the tea leaves, and I have a pretty good idea of what's going to happen. I think we're going to go in a recession. Interest rates are going to go down automatically because we're going in a recession. The administration has high hopes that they can raise up to $750 billion, right, through tariffs, and cut the taxes on anybody that's earning less than 150,000 to zero. That's the rumors. There is nothing out there yet. If they bring in 700 and with the Doge cutting some spending as well, cleaning up house, they're saying we're going to be fine. Short-term pain, long-term gain. Well, the short-term pain is short-term pain. I mean, I feel sad for the people who are retiring. So they're going to get their 401k statements, and they're going to see a 25% decline. Look, selling brings on selling, people. There is no ifs and buts about it. This is how the world works. And at the moment, we have these anemic rallies snapping back to where we came from and then rolling over. And we rolled over again today. And that's why I'm wearing the red hat. So red days, red hat, green days, green hat. But I do have it in case Trump says, okay, April Fools, no tariffs, and the market rallies 10% in half an hour. Then I'll switch it to the green hat. I doubt that that's going to happen. Calmly and coolly, I am adding to positions, new positions now. I traded those before. I'm just getting back into it. So I have 2 accounts. One is an investment account, long-term investment account. One is a trading account. In my long-term investment account, I'm dealing with about 6 different stocks: Unity Software, Nike, Kava, which is the restaurant group, SOXL, which is the 2X ETF of SOX, Semiconductor Index, Robin, ROBN, SoFi. Those are the 6 names. I got lucky, and Google, 7 names. I got lucky and bought shares, put 30% of the account into work last week. It was close to the lows. Keeping powder dry. Today I'm selling puts on Nike and Kava. The other ones I'm holding, and I don't mind adding shares to Nike. I'm selling the 50 puts. May 16 puts are about $2.50. I don't mind owning Nike at 47.5, which is the price of Nike going back to 2016. There may be some restructuring done on Nike. I'm pretty sure they're going to get hurt pretty badly with tariffs. But that's one. Kava, I am selling the 75 puts. I had Kava in the 30s, brought it to 150s. Now I'm getting back into the 70s, mid 70s, let's say. Soxel, which is a 2x ETF of SOXX. I don't mind owning it, a whole bunch of it into the 7s, 6s, and 7s. Robin is the 2x ETF of Robinhood. I like the company quite a bit. I don't mind owning it. SoFi, I don't mind owning about 8.5 range. Unity Software, about 18 to 20 range. And that's where we are. And Google about 140. So I'll build a pretty diversified portfolio, and then let's see how that performs. On the trading side, obviously it's a lot more active, a lot quicker. I have a TLT trade on. I will go through the positions in a minute. I started putting a Soxel synthetic on today. I have some Google options expiring in July. Keeping my powder dry, still about 75% cash. I will add to Soxel trade that I started putting on today, but I'll share that with you guys in a minute. So let's see who's here. Traveler, good morning. Good morning. Good morning, Doug. Good morning, Mojo. Manny YP, good morning. Vic, good morning. Good morning, everyone. So here's the link. If you guys want to join and show your pretty faces. Okay. Here's the link. There's the StreamYard link. You don't need anything. Just click on the link and make sure you're in a quiet place with good internet reception, and then we'll chat. I'll bring you on if you have any questions or not. The other thing that we have a Telegram members only chat group where I post my trades live. Again, not trading or financial advice, but if you're interested, join, become a member. I will send you the link of the Telegram chat group, and you also will have access to the members only lives every Wednesday and the replays of it. Obviously, those are really, really good. We have some really experienced people in there, and we have some newbies, and we have some intermediates. So so that's where we are. And long story short, let me take a screenshot of this. Give me 1 second. Okay, that's interesting news. Anyway, so there we are. Let's look at some charts. Let's answer some questions. If you guys want to join, here's the link. Let's look at some charts. We're down across the board, but I'll share with you guys what I'm doing. Trading account. I said what I'm doing in the investment account. Let's take a look. All right, so S&P 500 down about 3%, NASDAQ down about 3.5%. Yeah, I mean, we're rolling over. I mean, there's no ifs and buts about it. And here's the 1 year, 1 day. Let me go to the bigger chart so you guys can see it. We're definitely rolled over, retesting actually the low from a couple, 3 days ago. Let's look at the charts, the bigger version of charts. Here we are. All right, so this is the SPX. Yeah, we're retesting the low from a couple days ago, about 5,100. If we don't hold, I think we're going to retest. There are a couple of uptrends that are coming into play. If you will look at SPY, it's just the same thing, but I have the MACD attached there. Retesting that low. I mean, we bounced exactly to where we should bounce, to the 20-day EMA. You know, a lot of people are talking about the death cross, 50 crossing the 200. I mean, sometimes it works, sometimes it's about 50-50 actually at best. The only good thing today, volume is really, really anemic today. And MACD is still negative, under zero. I mean, not much to celebrate here, okay? I think the market has bottomed for now. This retest is necessary though. And here's the triple Qs. Triple Qs actually are weaker than SPY. Yeah, I mean, lower lows, lower highs, downtrend established. We're in a bear market. Don't kid yourself. Don't wait until 25% to call what it is. We can look at some Mag 7. So actually, let's look at the positions. Here are the positions. So I have, well, I'm trying to buy more. Google earnings are coming out on the 24th. I'm throwing a lot of ticket in, buying some options at 20 cents. July 45s on GGLL, which is the 2x ETF of, what do you call it? The 2x ETF of Google. Way out of the money, but they'll double, triple if Google has decent earnings. If not, they hit the wall. Not concerned. Buying some Newsmax calls. This was the stock that went from 10 to 280 and then came back down. We're at 22. I'm buying some 40 calls, 60, 70 cents. No big deal. So the TLT trade, yeah, TLT trade is not looking hot at the moment. Down about 1,500 on that position. Most of you know, I think interest rates are going to go lower. I'm doing this with March 2026 leaps, selling the 85 puts, buying the 95 calls, selling the 85, selling the 110 calls against it. So let me see how much I can do this for. Sell the March 2026 is. Not May. Let's go to March. So selling the 85 puts. I don't mind owning TLT if I can do it with like $3-4 credit. I don't mind owning it at 81 shares. There's the 85 puts, buying the 95 calls and selling the 110 calls. It's 3.5 credit. So I don't mind doing this about 3.5 to 4 range. I'll probably add a little bit more tomorrow. And that's the TLT trade. And last but not least, today I started doing a synthetic on SOXL, SOXL, which is the 2x ETF of SOXX. And where are we on that one? Well, on that one, SOXL is 825. I am selling the May 16th expiration 7.5 puts and turning around and buying the SOXL May 16th expiration 12.5 calls. We're at 825. I'm doing these with about 70-cent credit. So where does that put me? 70-cent credit. If I do get assigned May 16th, if it's below 7.5, I will get assigned at 7.5 minus 70 cents or 80 cents. I have it. I have orders. I did 15 of them. I have orders at 80 cents. Let's see. Yeah, I have more orders to sell to do the same thing, synthetic at 80 and 85 cents. So if I do get assigned, I will get assigned about 675, 660 range on SOXL. I'll take all the SOXL on the planet at about 660, 665, 650 range. You know, then you can sell calls. You can do a whole bunch of things. Why am I doing the synthetic? Well, it's like a little kicker on the upside. If Trump says something, we zoom, right? I had the same position, but with again with Maze, and I made a ton of money last month with that. And if you remember, or just a subscriber, you already know. Yeah, that's what I'm doing. I'm gonna probably do up to 30, 40 lots of this. I will add to the TLT trade probably tomorrow around 4. That's with the May 2026 leaps, March 2026 leaps. So I think by then rates will be about 3% because we'll be in a recession. The only negative thing that I'm seeing in there is that this new rhetoric trying to get rid of Powell. If Trump gets rid of Powell, we may have problems, Houston, with that trade anyway. But I'm only doing it with about 20 lots at the moment, but I don't mind adding probably another 5. What else? Yeah, that's where we are. And I'm dealing with 20-cent, 30-cent options. If they hit the wall, I'm not going to get hurt. If they don't hit the wall and they give me a little kicker, great. So yeah, that's where we are on the position side. As far as charts, STLT. Let's adjust those charts. So again, the TLT trade. What am I looking at? I'm looking at TLT going back max. Okay, this is TLT going back to 2002. TLT in 2002 was 84. Today we're at 86. Low on TLT is 80.5. So if I'm selling the 85 puts and buying the calls and selling the calls with 3.5 to 4 credit, well, I'm equaling the low of 2013. If the rates go above 5%, we have massive problems in this country. Massive. So as you guys can see, the lines here, I'm short the 85 puts. If I do this overall trade with 3.5, 4 credit, I'm going to equal the 80.5, 81 level that we were at 2003, 2004. You know, forget the high at 180 on TLT, but I think at 3% interest rates, TLT should be about 110 to 115 range. That's why I'm selling the 110 to 115 calls to create a bigger credit for myself. And yeah, the only reason rates will go up in this country if the foreigners completely dump their bond holdings and spike our interest rates, and we're in deep shit. That's the only way I see this going sideways. And then at that point, I don't want to own TLT. But then again, it's just another trade. My life doesn't depend on it. I put about, I don't know, 25% of buying power into this account, and I'm getting paid to play at the moment. This is Apple, rolling over, nothing special. All these Mag 7 stocks, are, except Netflix, are under their 200 EMA. This is Google. In fact, retesting the low. Earnings are coming out, I think, on the 24th on Google. They're the first one to go out of the gate. This is NVIDIA. We know what's going on with NVIDIA. You know, they took a $5.5 billion write-off. You know, low last time on NVIDIA was about 86. Yeah, 86.62. Yeah, 86.62. Then we rallied to 115. Pretty decent, huge rally in like 3-4 days. We made some money actually on NVDL, which is the 2x ETF of NVIDIA. And we're going to retest probably. I mean, that's the way I look at it. SPX, we looked at that already. What else? Let's look at Meta. Let's look at the Mag 7. Almost making a lower low. Okay. I mean, these are showing tremendous amount of weakness. Amazon, retesting the low. See, they're all rolled over already, right? So it goes to show how weak the market's at. The only good one is, well, not good one. Well, whatever. Netflix. Bounce off the 200 EMA. Massive bounce, actually. So, and a lot of people are asking me about Tesla. Okay, all right. What about Tesla? I'm not touching Tesla. Tesla earnings are coming out tomorrow. We know they're going to be horrendous. We know what to expect. Now, Tesla, if Tesla goes up tomorrow after the earnings, then we have something. And I'm not going to trade Tesla itself. I'm going to trade TSLL, which is the 2x ETF of Tesla. 655, down about 15% today. So let's look at Tesla though, because TSLL goes off Tesla. I mean, Tesla takes out, I don't know, if Tesla closes below these lows, again, technicals in this type of market really can't be too trusted. It's about 215. If Tesla closes below 215, 213, 215 range, I think we're definitely going down to this uptrend line, which is about 165, 170. and it'll be a quick trip there. So at that point, I may look at TSLL. Maybe it'll be like $4 or something like that. But at the moment, I have no interest in Tesla. I'd rather put my money in Soxel. This is Hood. I like the company quite a bit. I really do. But I'm not trading Hood, which is Robinhood. I'm trading Robin, which is the 2x ETF of Robinhood. $6. We rallied to literally 14, and now we're pulling back. I don't mind owning this somewhere down here. Around 8, I'll start selling some puts, put some synthetics on. SoFi, I don't mind owning it at about 8 again. I bought some shares, but then I had a synthetic on. I mean, look, we all got lucky. Uncle Trump saved our butts when he said tariffs delayed, because they're looking at the bond market saying, okay, hold on a second. None of what we want is going to work if the bond market keeps spiking interest rates, right? So, you know, I have some favorites. Obviously, Kava, I'm selling some puts today. I want to own Kava right about 72, 75 range. I'll keep selling puts. I'm all right with that. Nike, same thing. I mean, you know, it looks like death at the moment, but then if I sold a 50 put and get assigned about 47, 48, no opposition owning Nike at 47, 48, especially in an investment account. What else we're looking at? There are some smallish names I was looking at. Affirm is one of my favorites. Retest of the low at 30. I'm definitely going to be selling some puts or buying some calls or doing some synthetic stuff on this. AMD is right back to where it was. Nothing major there. All these, you know, chip stocks, right? Avago, and that's why I just want to do stocks. I don't want to pick one. I want to get into you know, ETF that way. Chinese stocks are holding extremely well, right? I mean, yes, they did pull back a little bit, but I think this is telling me something, which is a deal may be imminent. This is with all the talk of us delisting these stocks and stuff too. So I like Bloom Energy. I like Upstart. Let's see. Retest of 30 on Affirm and Upstart definitely will be there. Now, there's something very, very interesting going on. This is the BlackRock Bitcoin ETF. What is not going down? In fact, going up by 2% today. Bitcoin. Has Bitcoin completely separated itself from the stock market? Is this what's happening? And another thing that's zooming is gold, right? So all these tea leaves that I'm reading, gold is at $3,400 an ounce. We had a pullback and we're literally up close to $600 in the last 7 days. Okay. Gold is saying inflation is coming back. Bond market saying inflation coming back. Stock market's not liking any of this. And we're putting tariffs on and saying, I'm the king, come kiss my ring. Not sure what the deal is in Washington. But besides that, IBIT is the BlackRock Bitcoin ETF. BITX is the 2X ETF, which you can participate in. But as you guys know, I trade MicroStrategy and MSTU. MicroStrategy down to 314. MSTU is the 2X ETF of MicroStrategy, as you guys can see with all the labels, because I can't get rid of it every single time. I have traded a ton of MSTU, and I keep doing it. You know, keep going to the well, buy it in the mid 4s, hopefully, and sell it in the high 5s. By selling puts and selling calls, getting called away or getting assigned. It's working out fine. I don't know. AST, Space Mobile. I like the stock, but market dependent. All these stocks are market dependent. Okay. I like Redwire, RDW. You know, hopefully pull back to 7. You know, a retest of the lows. A lot of these things you have to pay attention to how strong they are or how weak they are. If they're making lower lows without the market making lower lows, the indexes, that means they're underperforming. If they're hanging in there, down a little bit when the market's making lower lows, that means those were the ones that are going to first turn back up and go crazy. So when the market does go up. So pay attention to that underperformance and outperformance. Goldman Sachs. See what I'm saying? Okay, so Goldman Sachs low is 440, 435. It bounced to 525. It's only down like 10 points today while the market's on its ass, right? So when the market does turn next time up, Goldman is going to go up first. So that's called outperformance. So pay attention to those things. What else is going on? Not much. Yeah, whatever's green today is good. Whatever's red today is not good. Well, especially if it's making lower lows. So NVIDIA I'm watching. For sure I'm watching, but I'm against NVIDIA's and Soxel. Yeah, retest of the lows. I'll be all over NVDL instead of NVDA, which is the 2X ETF. This is NVDL. Went from 25 to 40 in 3 days, right? It's the 2X ETF of NVDL. When you are trading these ETFs, please, please, please pay attention to slippage. There will be slippage. If you guys don't know what that is, please study it. This is Reddit. I'd be interested in a retest at 80. I think it's an okay trade. It came down, closed the gap at 81, bounced to about 110 in 3 days again. All these stocks are going to retest the lows. The good thing today is very, very low volume. What else? Yeah, we know about SoFi. SPY is making lower lows, it looks like. Let's see, is that what it's doing? Yeah, it's just struggling. It had a couple of anemic bounces, but nothing more than that. Of course, now watch Trump tweet something and then this thing rips. I don't know. It's so dangerous, really, to trade these markets at the moment. If you get especially caught on the wrong side, face ripper rallies, face ripper sell-offs, very, very, very difficult to short-term trade, especially. So whoever's saying, oh yeah, I'm making billions, I'm like, good luck. I'm just trying to be staying green for the year. That's all I'm doing until this thing settles down a little bit. Yeah. Okay, let's look at Hertz. Hertz had a massive mover last week because Bill Ackman bought 20% of the company. Yeah, they're hanging in there. Very interesting. Definitely hanging in there. So yeah, that's where we are. SPY, nothing. Anemic, down 3%. Honestly, it's like, yeah. Are we going to go retest the low in the next couple of days? Looks like it. Only good thing today, again, is the volume. Other than that, not much good to talk about. So that's where we are. I want to add to my Soxel at 80-cent credit and 85-cent credit without a question. Bond, the TLT trade, I want to add probably tomorrow if I can get done a $4 credit. That I don't mind doing whatsoever. And what else? Yeah, that's about it. There's nothing else to talk about. I will just add to those, and when stocks get to where I want them to get to, I'll transact. If they don't, they don't. Always try to keep cash, and that's where we are. Let's see if any of you want to come on. No, doesn't look like it. Okay. Hello, Lynn. Hello. Good morning, everyone. Anybody want to come on? No? There's the StreamYard link. This is your chance. Red hat means red day. Good morning, Adele. Good morning, Lynn. Macro, how's your little baby daughter doing? I hope everybody's good. And about more Walmart recently. Okay. Yeah, retail is tough at the moment. S&P and Bitcoin correlated right now instead of NASDAQ. No, they're not. Bitcoin is going up. S&P is going down. I don't think they're correlated. Actually, they're breaking the correlation. Gold is screaming, raise rates to the stupid-ass Fed. Raise rates. We will go on a depression if we don't raise rates. I told you I was pounding the table a month ago on gold with 3K. I told you, Sergio. Okay, what about it? You're long, I hope. Now it's time to hold gold, about to go flat now as well. Okay, cool. All right, see, that's one of my members. So in the members group, we do a lot of good work. We have Macro Baked, who's pounding gold, and Philip Morris, which has been right for months now. Trend is your friend. Gold is screaming inflation. Bonds are screaming inflation. Trump is going tariffs. You guys get the picture yet? It's pretty difficult at the moment. But tippy-toe, in the markets is a good thing to do. You cannot just ignore everything. Again, I've been in the markets for 30 years. I have never seen this much I have seen volatility, but short-term volatility. What's happening now is that, honestly, all these earnings that are coming out this month on the S&P 500 stocks from Mag 7 all the way down means nothing. Honestly, it means nothing. One man is running the show, and he likes it, obviously. And with one tweet, he can change everything. And if you get caught on the wrong side, if you're short and he tweets something like a few days ago, your face is ripped. Your account's gone. If you're long and he says something stupid, nasty towards China, that's gone. So you just got to watch your steps. I mean, and roll with the punches, and don't be a trading junkie. Just put trades on that you see fit, have full commitment, and then go with it until things change. Because macro is definitely changing. I've been talking about this for a few months now. I'm seeing macro changing. I'm seeing economy slowing down. Economy slowing down, with my past experience, as lower interest rates. However, there's a kicker here. Lower interest rates are not happening because you put on the tariffs. And the bond market, although the Fed wants to lower the rates, according to the data, if tariffs are going to push inflation, now Fed's not going to lower the rates, and bond market's seeing this and raising the rates. In fact, that's what they're doing. Fed raises rates, we crash. They lower rates, we inflate. Not necessarily, actually. Why don't you grab the link and come on? We can discuss that. Not debate it, discuss it. Fed raises the rates, we crash, potentially. Fed is not going to raise the rates. They lower inflate, we inflate. Well, that's why they're not lowering the rates, because just Trump wants it. Okie dokie. So Fed is in a box for sure. Fed goes, we're data dependent. We have a mandate, 2% inflation, full employment. Trump goes, screw yourself, lower the rates. But Trump maybe is not understanding that if you lower rates, right, and then put the printing machines back on again, that's inflationary. That's how we got into trouble last time. I mean, look, he has Scott Bessent. Scott Bessent is brilliant. If he's not talking to him, I don't know who's talking to him, because I don't understand the logic actually at the moment. That's Econ 101. Yeah, and you seem to be pretty happy about that. Are you happy about other people's misery, Macro Baked? Seems like you're pretty happy about what's going on. That's not true. Okay, so he's here. Hold on, we're going to debate this. Not debate it, discuss it. I'm going to put you on here. How do you think earnings are going to be for Triple M, IBM? Go Google. I don't know. Google is in trouble a little bit. I think Waymo is going to save Google's butt. If we go in a recession, advertising revenue may get cut off. They're coming out on the 24th. We'll find out. But I think that all the guidance is going to be pulled. They're not going to talk about it too much. All right, let's put this guy on. What?
Yo. What's up, Sergio?
How you doing, buddy?
Good, good. And yourself?
How's the baby?
Good. She's good.
Yeah?
Yeah, gaining weight. Doing her thing.
Changing lives. That's how this changes lives.
Yeah.
Are you active dad, changing diapers and all that stuff, or
Yeah.
are
Yeah.
you
Yeah.
feeding?
Definitely very active dad.
Awesome. All right, so this is macro baked. All right,
What's up,
so
guys?
it seems like, see, hard rock and a place baby. It seems like you're like getting some joy out of people's misery here, because people's 401ks are getting trashed. People's retirement accounts are getting trashed. But since you're a young guy, this actually will work for you pretty good, right?
Yeah. I think also because I don't think it matters the age. You should definitely be into wealth preservation no matter what age you're at. Of course, we all know the younger you are, the higher the risk tolerance you can take. I've taken those risks. I've lost a lot of money in my 20s, but I got to learn lessons that only those losses can give you, right? So I laugh more at, I'm not laughing so much. Um, I guess it may seem like I'm laughing at the average Joe with the 401k, but then again, I don't really believe in 401ks.
Okay.
So, but at the same time, I'm more laughing at the US government and the inevitability of what's coming. And so, when I mean like, they raise rates, we crash, and then they drop rates, we inflate. I don't mean we hyperinflate 50% a month. It may sound like I'm talking
No.
like that, but I'm talking what they're claiming. What's the Fed claiming? 2% a year inflation is what they're claiming. We're getting far more than that. So no
Well,
matter what, we're getting inflation, and they're
okay.
telling it to our face.
Well, if
And
you
so that's what I mean by if they lower rates, we're just going to inflate even faster.
no, I agree with you. If you've been following me, which I know you do, for a while, I've been talking about that 2% inflation is just a number.
It's a made up
Inflation,
number. They made it up out of thin air.
yeah, inflation has been running in this country close to 6%, 7% a year for the last
Exactly.
5-8 years.
Exactly.
And that goes from,
Gold shows that since 2000, gold has actually beat the S&P 500 with a 9.5% average. I think probably higher now when the S&P is averaging about 8% in those last 25 years. So gold actually beats the S&P 500 in the
yeah,
last 25 years. Collectibles, gold, and real estate are your three best performing assets of the last
yeah,
25 years.
that's correct. And what's
So
happening is that, though, a lot of people look at the Fed numbers saying 2% inflation. That inflation basket that they look at has nothing to do with what we buy on a daily basis, right?
They take out the most expensive things: food, energy, and shelter, as if we don't use those on a daily basis.
Exactly. But the other thing to me is you can pretty much judge all of this by $100 bill, right? So nominally, $100 bill looks exactly the same as it did 7 years ago, exactly, or 10 years ago. It's the same $100 bill. The problem with that is, what is that $100 bill buying, or was buying 10 years ago, and what is that $100 bill buying today? So according to the Fed, if it was 2%, 10 years, 20%, so that $100 bill has been cut to $80.
Yeah.
Right?
Check how I do that example, but with gold. In
Well, no, well, let
1973,
me finish. Let me finish.
yeah,
So, but I'm saying that the $100 bill actually has been nullified to zero, actually,
yeah, it's like a
it's
penny or 2
6%.
pennies. Yeah,
Yeah, exactly, pennies. Yeah, because it's about 6% a
that's
year,
2
right?
pennies worth of value, and that's about a drop.
A dollar is
90%.
today. So 10 years ago's dollar today is worth about 40 cents, 35 cents. So, and that's evident when you go shopping. You're going to buy food, right? We all got to eat.
Yeah,
You go to Costco 10 years ago with your $100, you would have walked out with 12 items at $7.99 a piece. Today, you go to Costco, everybody goes to I love Costco. Thank God to Costco.
yeah.
You go to Costco, you put your $100 down, you're going to walk out with 6 items, 7 items, maybe.
Yeah.
So that's where you just truly understand what's going on.
Yeah,
And
shout out
gold,
to Costco gas too.
yeah, and
But
gold is
yeah,
a
so
great
Sergio, how
inflation
I
hedge.
like to tell people how you save gold and why, because in 1973, you put $30 in one pocket, you put an ounce of gold, which costs $30 in the right pocket. Fast forward to today, You pull out the $30 and you pull out the ounce of gold. Which one buys you more today?
Absolutely, yeah.
So
For
that's
sure.
how you hedge against inflation. And the point of gold is to preserve wealth. If you don't have wealth to preserve, then go out there and risk, take some risk, learn, and get your wealth up so that you have something to preserve. Because gold is to preserve. That's why it's so boring. If you don't have
Yeah.
anything to preserve or a lot of wealth, you're not worried about losing anything. That's why I'm kind of laughing at the situation right now, because I told you already, all my stocks are up 80% plus dividends, and my gold is up 50% in over a year. I'm
Yeah.
winning in this in this situation right here. And so that's why I kind of laugh, because I'm betting against the government, I'm betting against the Fed. And
Well,
it was
I
stupid to
agree
do
with
that
you. And
before. Now it's kind of the end game. We
yeah,
finally
no,
entered it.
I think I agree with you, and that's why I've been bullish on Bitcoin forever now, and I think that's a pretty good indicator of what's happening out there as well. I mean, most people think it's hocus pocus money, but I don't think so. But gold definitely, and I've started the channel like a year ago, and I've talked about gold quite frequently. And in I'm from the Middle East. Okay, I was born there, and in our countries we have hyperinflation. It's like
Yeah.
like
Yeah.
50% a year.
All the time. Yeah.
And I have learned that at a very young age. How did my dad protect his wealth, like you're saying, in a country like Turkey or Lebanon or whatever? Is he used to go buy gold coins,
Mm-hmm.
because that or buy real estate, one or the other.
One or the
Now,
other. Yeah. Hard asset.
those are how you protect your wealth. Because if you keep it in cash under your mattress, that money is garbage. That's like confetti money. It's worth nothing. You know what I mean? But in this country, we have this stigma that we don't teach any of this stuff, any of this, to our high school kids or even college kids, and they have to pay the price to learn the hard way. And
Exactly.
then they go borrow money to go to college for a 4-year degree in history or some shit that they're not going to make any money on,
Yeah.
right?
I have
And
friends
then
like that, unfortunately. Yeah.
and then they get out with $200,000 debt that they're going to pay the rest of their lives, and
Yeah.
then the money that they're going to earn is going to go to interest on that, loans,
And then
student
they
loans.
put it in a 401k that's taxed, and it's
Yeah.
manipulated.
Oh,
I like, how you do, you're trading, you're making your money. Whereas if you're playing long term in stocks, it could be very risky, because sometimes it could fall so hard, it'll take you 10-15 years to get back just to even. And
well,
so
for example, I'm just starting buying Nike in my investment account. If you bought Nike for the last 4 years, 175 down to 50, right?
okay.
And you could say, oh, one day it'll go up. I'm like, no, it may never go up. But at $50, I see value in Nike. At 120, 110, 190, 80,
Overvalued.
70, 60.
Mm-hmm.
What is happening here, right?
Yeah. Yeah.
So, no, I do trade, because my trading account actually is my inflation hedge, because last year I was up 120%. And this year I'm still up with all this garbage happening. I'm still up 25-30%. So that's literally my extra inflation hedge,
You're still
outside
beating out
Bitcoin,
inflation.
outside this, outside that.
Yeah.
But a lot of people cannot do that, man. A lot of people have jobs. A lot of people cannot pay attention to this stuff. And in that case, what you're doing is correct, right? So you have gold, and you have consumer staples such as Philip Morris, because if we do go in a recession, and Philip Morris is screaming that we're going in a recession,
Yeah.
that's for the fact that people smoke more, eat more, and drink more alcohol
Cola,
when we go in a recession. Everybody's depressed. You know what I mean? So yeah, man. No, you're doing great. I mean, I think I'm trying to figure out what the game plan is in Washington at the moment. I'm not seeing it. I'm seeing like some weird stuff going on, and I hope they know what they're doing, because they are definitely playing with fire.
Yeah, that's where I say, like, the rock and hard place kind of thing, like, what's the Fed gonna do? And it's just, also, I just laugh at them, because I've read The Creature from Jekyll Island. I know how illegal they are, and how they just manipulate markets, and they're just here for their buddies and to enrich their own banks, like. So I just laugh at how their game is ending anyways. But in the end, they're gonna keep winning, because they have all the wealth, unfortunately.
Yeah. Well, but that's why big money makes money, right? Because
Yeah.
they
They gobble everything up.
Yeah, and they got, you know,
Merger.
once
We
in a
have a
while.
record merger acquisition. All the bigs buying up all the littles. Like it's
Yep,
a record.
that's for sure. Yeah, and that's how they accumulate the assets, right? That's why 2%. I mean, I'm not a socialist; I'm a total capitalist. But 2% owns 90% of the assets in the country.
Yeah.
So, but I think on this pullback here that we're getting, hopefully people have some sanity into them, and because again, 50% of the U.S. does not own stocks.
Yeah.
Okay, and I think if you're young, okay, and I'm not saying time the market, because to me, spending time in the market is better than trying to time the market, because most
Yeah.
people don't have the time.
And you'll learn a
Um,
lot too.
yeah, but you know, after a 20-30% haircut, maybe that we're having now, dollar cost averaging into things, if you're young enough, 20s, right? I think
Yeah.
is a good way to go. But yeah, oh no, I was talking about this on Friday. Maybe you caught it, maybe you didn't, but please go watch it. This is the lost decade, actually, to be honest with you.
Mm-hmm.
If you are in bonds and if you've been in stocks since 2020, you're not making any money. It's just a lost decade. So 5 years already have gone by. If you look at bonds, 2020, rates went up, bonds went down, stocks did go down hard and then came back. So already we gave up what we gained last year. We're on our way to giving up what we gained in 2023 now. And we're just a lost decade. So 10 years of nothing. Basically, now in between, there are these massive moves, right?
Yeah.
That's where I want to make my money.
Yeah.
So to
The
me,
volatility. Yeah.
exactly. So, but not everybody can do that. And volatility, some people's friend and some people's enemy. And you
No,
move low.
definitely. That's why I've learned my thing is kind of just consistent dollar cost averaging into long term companies. And that's why I'm also, like I said, with the like day trading or options trading, that's just 10 to 20% of the
Yep.
allocation of the portfolio, which you say don't, I think you said don't use more than 10% on a trade,
Nope.
anyways, you know, of
Nope.
your portfolio.
Nope.
So basically, I'm kind of going all in with my speculation money, which is 10%. So it's either way. It's like it's kind of like go big or go home on the options. You
Well,
know,
because
like
what's going to happen is that with that 10%, even if you blow it, right? Everything you're doing is working so well that if something is going up 30% in your account over a year's period, and you put in 2%, 3% of your total, you know, net worth into some sort of short-term option trading, and if that's the kicker for you, that's the kicker for you. If not, it's not a big deal. But
it's not
no,
a big deal. Exactly.
I fully get it, man. So yeah, cool. Thanks for coming on.
Yeah, no worries.
Best wishes again to your little baby,
Yeah,
and
appreciate it.
hope everybody's doing. What's her name, by the way?
Sayla.
Selah. Beautiful
Yeah,
name.
it's
Beautiful name. Well,
yeah,
enjoy it. Enjoy life. Enjoy your correct calls on Philip Morris and gold. Here's one of my members who's been pounding the table for I don't know how many months now. Gold, gold, gold. You know, and Philip Morris. And if you guys look at the charts, you wouldn't figure out that the market's selling off by 30%. They're just going from the lower left to the upper right,
yeah.
and the
That's
market's
why
going
it's
from the
like I'm
upper.
like so. And Sergio, for a while, that trade was kind of going sideways for me, while everything else, like all the speculative stuff, and was just exploding, and I'm sitting there feeling like an idiot, you know. But I kept collecting my dividends, reinvesting, keep putting in, kept accumulating as much gold as I could possibly, and now it's looking good. So it
Absolutely, you're looking good. You're looking like a champ. So, but again, you know
took
what
a
I
while.
say. You know what I say. Bulls make money. Bears make money. Pigs get
Pigs get
slaughtered. Be careful. Be
yeah.
careful.
No, that's why I did. It's funny you say that because the other day, I think when I just checked in on the Telegram chat, you had said that trade's kind of like not unwinding, but it's kind of slowing. And I had kind of seen that, so I took a little off the table on the Philip Morris, but just because,
I would sell calls. I would sell calls on all those things, and then bring in cash. Right, make him into a cash cow. And if they take it away from you, let them take it away from you. Right,
and just get it.
because the
Okay.
thing is double, tripled anyway. So.
Yeah,
But yeah, I
seriously.
mean, no, you're doing the right things, bro. You're doing the right things. I'm glad you're doing well. I'll
Yeah, I
see you on.
appreciate you. Appreciate the
Yep.
channel. Appreciate the team. So have a good one,
Thanks, man.
Sergio. I'll keep
All right.
listening.
Thank you. Take care. Anybody else want to come on? See what we have? Our members? Sharp. Super duper sharp. Um, less buying power. Yes, Jason, correct. Vic says, yeah. And how do you think earnings are going to? If I had that, I wouldn't tell you. No, Google, I told you. IBM, I think, is going to disappoint. I think all these companies, first of all, they're going to pull. I'm thinking they're going to pull guidance because nobody knows what's going to happen. I mean, but I assure you one thing. IBM, M, Google, they were all talking about what? There was a buzzword for 2 years. AI. That's gone. What's AI is going to be replaced by in the earnings calls? Tariff. You're going to hear that probably 30 times on each earnings call going forward. So yeah. Yes, I love Costco. I'm not seeing game plan. Yeah. I'm pretty good at reading these things. I don't see it. I don't see what I really don't see what the contradiction is like really confusing me. I mean, it's not confusing me. What I'm saying is it seems like push-pull is happening. So they put the tariffs on. They want to bring in money into the treasury. On the other hand, they're going to release that money into the public by cutting rates tax rates, income tax rates to zero on anybody that owns 150,000 or makes 150,000 or less. Okay, that's a good thing. So that's going to kind of nullify the effect. But then the debt's still there, 37 trillion. Dodge is working on the debt. I don't think they're going to find into the trillions. That's still going up. We just declared economic nuclear war on China. My gun is bigger than your gun. But I don't think you can run a country this way. I mean, again, it's not political. I'm just looking at the macro, and I'm not liking the picture. And if you guys have been following me for a while, you've been seeing this for the last 5-6 months. So yeah, just tippy toe in, tippy toe out. Hopefully things will work out. And yeah, my socks will trade. I like my socks will trade quite a bit, actually. And yeah, that's it. So nobody else wants to come on? The link is up here. Where's the link? Right there. You guys want to come on? Anybody else? Spend some more time? Okay, let's look at charts one more time. Let's see where we are. Okie dokie. Yeah, we're just keep selling off, man. It's not good. Just falling on its own sword kind of a situation today. Let's see. There's 23 of you here, 25 of you. Why don't you just grab a link? Grab the link right here. Here's the link. Come on down. You're on The Price is Right. Here's the link again. If anybody wants to come on. If not, be that way. There you go. There's the link. Yeah. See this right here. Yeah. That's. I didn't want to say that today, because then people go like, "Oh, you're so negative." I'm like, no, I'm just trying to see what's ahead. This right there will be bad. Very bad. Extremely bad. Because China feels like a dog cornered, and you never know what a dog that's cornered is going to do. Because we're definitely trying to break China here. I mean, there's a reminiscent story here. You guys know Scott Bessent, our Treasury Secretary, current Treasury Secretary, was the one who broke the back of Bank of England about 20 years ago with George Soros. You guys know that, hopefully. Right? So they're trying to play the same kind of game. I don't know if it's going to work, but this is a very dangerous, very risky thing that they're doing. And China has pretty much said Taiwan is ours, and all the semis come from Taiwan. That Soxal trade will get blown out of the water if that were to happen, because we certainly cannot build fabs quick enough to make up the slack. I don't want to even think about that. I seriously, market will go limit down for like 4 days in a row if that were to happen. I have I have no doubt about that. Jason, you're 100% correct. NBIS, looking to sell puts. Bro, selling puts in this type of market is tough. Unless you have really, really good idea what's going on. Let's take a look at NBIS. Oh, Triple M. Let's take a look at Triple M. Just rolling over, man. IBM. Yeah. Sold off, rallied, rolling over again, just like anything else. NBIS. What's NBIS? Nebius. What is that? Nebius Group. Foreign company. Huh. I don't know. I don't know anything about it. New issue, it looks like. Came public about 15. Yeah. You guys heard about Webull coming public, and I mean, look at that. Oh my God, it's down to 23, huh? That may be about it. Do they have options on that? They did a SPAC on that. They came public, 10, went to 80, down to 23. Holy crap. All these SPACs and publics, they're just getting smashed. Newsmax, same thing. Looks like my options are going to go on that. Webull. Huh. I bet you they don't have options on that. No, they don't. Well, when they do, or we can buy the stock. Maybe we can trade the stock. Okay. What is happening? Let's see what's going on. Bond trade, still the bond trade. Actually, 86.29, 86.30. It's okay. Soxel, 75 cents. Well, we did it at 75 cents. Now we got to do it at 80 cents and 85 cents. And Max, not much going on there. Oh, we bought 10 more options at 60 cents. Yeah, pennies. That's what we're doing here. We don't want to gamble too much here. SPX. Yeah, we got to add Webull to our list. I don't mind buying Webull. At the gap, maybe 16, 18. Yeah, interesting. Okay. Yeah, NBIS, I don't know what it is, honestly. And there are many things to do, but not that one. Where are we? Okay. Yeah, bull got cooked. Sure did. Well, not if you joined from 10 to 80, buddy. Mojo says, yeah, Soros investor segment YouTube piece I posted Telegram explains how they did. Yes, they are. I have been seeing that. I'm kind of noticing that. But then 20 years ago, Bank of England is not the same as China. I think China's got a little bit more cojones on themselves. Circumstances are different, but they are trying to squeeze China because hit them when they're down kind of a thing, because Chinese domestic economy through their real estate shenanigans has been in the shithole anyway. And now we're trying to like put the dagger in the last bit. Yeah, I mean, a rabid dog, you squeeze him in a corner, you never know what's going to happen. I'm telling you, I was making an analogy of like I'm going to a gunfight with a 9mm. You have a bazooka, because that's what is happening to us right now. We're going into a gunfight with a 9mm. They have the bazooka. You know, they can spike our interest rates literally to 7-8% overnight if they wanted to, because we don't control our destiny due to our 37 trillion in debt. Yeah, it could be real gunplay there. I'm hoping to God that doesn't come down to that, because that's just bad. Although Trump keeps saying, oh, we don't want wars. I'm like, you squeeze these people enough, then shit's going to really hit the fan. Then you guys will understand what's going on. But anyway, thanks for the support. Much appreciated. So let's go through the schedule. Mondays, trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Fridays, trading, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Wednesdays, members only live. If you want to go become a member, please go join. Click join. And email me, sergio@sergioavedian.com. Sergio@sergioavedian.com, right here. If you want to become a member, at sergioavedian.com. I will send you, I think I did it right. Yeah. I will send you the Telegram group chat link. Someone getting blown on 10% is not that bad, bro. Next statement may be uglier. Good luck. Yeah, I know. I mean, I think we're just I don't know. Yeah, we both have each other by the you know where. I think that's what's happening. And whoever lets go first. And you know, trying to create a consensus around the globe and then have the Europeans and Koreans and Japanese join us against China, break them for good, that kind of thing. I don't think it's going to work. Honestly, I don't think it's going to work. He's right, though, about that. Yeah, for sure. But I'm hoping cooler heads prevail here, okay? It's not all negative, but yeah, I am definitely not liking what I'm seeing. And a lot of people tell me, how long have I been trading? 30 plus years, 20 years on a desk in Wall Street, derivatives, equities. How about you? CRO, FAQ. Long enough to have seen this movie multiple times and protecting myself and still be up 30% for the year. Pretty good. Yeah, I've been trading 30 plus years professionally for 20 plus years. And I have a small, not small, but decent family office account that I trade. Trying to learn. Well, you come to the right place. I'm new so far, 2 years. Okay, so here's my advice to you. Educate yourself as much as you can. Educate with the fundamentals. Don't watch too much YouTube. I mean, you can watch me, but the point I'm trying to make is fill your toolbox with as many tools as possible. Okay? Meaning there is a strategy for each occasion. If you're a zero DTE trader, you're going to blow account after account. You may get lucky here and there and make some money. But if you're a day trader, same thing. I don't do that. I've done all of it. I'm not good at it. What I'm good at is swing trading, position trading, all kinds of other things. I know options better than anybody. If you're going to trade options, please learn the Greeks, the relationship between, and the third level Greeks, such as Vanna and Charm. Because with this kind of high volatility, they're going to wipe you out as well, because you're going to place a directional bet and you're not going to make money even if the market goes your way. So there's many things. You got to, you know, it takes years. It took me years, obviously, but once you get it, once you get on autopilot, then you'll just kind of know what to do when. But more importantly, learn about money management, learn about risk management, learn about sizing, learn about patience, all these things, because it's a difficult thing to do. It's a difficult thing to make a living at. Yes. ABJ, absolutely. I love William. Yeah, I talked to William, and I think William is great. I do things a little differently than they're doing. But I am, like, for example, I'm trying to learn, well, not learn, I already understand. I'm trying to add that quant data to my toolbox. Do I need it? Probably not. But will it stop me from doing some boneheaded stuff? Most likely. So yeah, ABJ is fantastic. And yeah, I mean, you learn, but you got to pick your battle. You can't just be a technical trader or fundamental trader and trade 0 DTEs like they do. You can also, do a mix, a little hybrid, right? I know they don't pay attention to charts, and because I kind of agree, because it's from the past, but then patterns do repeat, and enough people, enough of the world, enough algos are watching it and following it in order for it to work. So still there's some validity to that kind of thing. But data obviously is important. So just like at my age, I'm trying to add to my knowledge base by learning. It's easier for me to learn what QD is doing and ABJ is doing, is because I get the lingo, I get the ideas, I get the correlation between, gamma, delta, all that stuff, how the market makers behave and how the institutions behave, right? So you have to understand that. But 2 years, yeah, you're going to pay the tuition. Sergio knows it's never that bad as long as world. No, it's never. Yeah, the world is too intermingled, or we're too, unless Trump has this idea that globalization is going to end, they're going to try to end it, right? Rewrite history. That will take time. That will take time, and that will be a lot of pain. What's up, Mr. Gambit? And the market falls over 1,200 points real money when you vote for fuck around and find out votes. Yeah, I hope you do too. There is like, you got to pay attention to the bigger picture here. Okay. FAFO is, I'm hoping they're not doing FAFO. Yeah, this is like, I don't want to get into the politics end of it. I mean, I do agree with what they're doing. Do I agree that there's fraud and waste in the government? Absolutely. Do I agree to the pace and scale and scope that they're trying to clean it up by? No, I disagree. I voted for Trump, by the way. So do I agree that you can run the US, a country of 350 million people, like Elon runs Twitter? No, I disagree. You can't. You can't go into a government, but again, on the other hand, I think it's completely necessary that the waste and fraud and all these NGOs and things like that. But is it going to add up to real dollars? That's my concern, right? And do I think we need middle class jobs back, manufacturing back in this country? Because we were that 40 years ago, and now we're just nothing but a servicing economy and spender economy. 80% of our GDP is consumer spending. Do I think those jobs need to come back? Are they going to come back from China? No, because no American wants to do that. They all want to flip TikTok and make TikTok videos. Nobody wants to work in this country. Okay. I mean, you got to call real what it is if we want to talk about that. Do I think they're going to be able to bring high-paying manufacturing jobs back to this country? Not as fast as they like. I would like that to happen, but I don't think it's going to happen. So yeah, I'm kind of, torn between, other issues are other issues, but economically, it's very easy to say, hindsight is 2020. Well, yeah, now you're figuring out, I already knew this. I mean, no, you didn't know that. Are you short the market? If you know that, then you should have made a fortune already. My point in all of this is, I'm still in the camp of short-term pain, long-term gain, although there is a time limit on this. That's why they're doing what they're doing now, as opposed to waiting for it, because we have things called midterm elections. And if they lose the midterm elections and they lose the House and the Senate, which they have control over now, nothing will get done. Actually, the market will rally now if the Republicans lose until then, we may sell off. But short-term pain, long-term gain is necessary. Now, should that be done by declaring economic nuclear war around the globe? No. But do I think trade is fair? Absolutely no. Right? But I don't think you can do this with a sledgehammer. That's what he's trying to do, and that's his personality, right? My way or the highway kind of a thing. But he's not getting that the other side is a lot stronger now, and we are not who we were 30 years ago. 30 years ago we were the only superpower. Now we have China, and Russia is gone. We have China and US. There's two superpowers. We brought them here by shipping all these jobs and all these factories and all these things, right? And now we want to come bring it back. Not going to be done, or it's not going to be that easy. And again, I want to end this by saying I agree with a lot of the things they're trying to do. I disagree with the pace and the scope of the things that they're trying to do. So, yeah, market will drop another 1,000 points, right? Great buying opportunity, generational buying opportunity. If the S&P drops to 4,000, 4,200, 3,800, somewhere in that range, another 25% haircut from here, 20%. Great, right? It's good for my kids. They'll DCA into something and it'll be good. Yeah. So anybody else want to come on? Anybody? Grab the link. It's up there somewhere. Yeah, that's where we are, people. So much love. Well, I don't think he's bullying. I think there is a point in what they're doing. That's a very good point, actually. Actually, there is a generational wealth transfer coming up. That's why, that's why I like all the baby boomers are retiring. There's 70 million baby boomers retiring in this country, started 5 years ago and going to go for another 10 years. There's generational wealth that's been created because we know Gen X and Gen Zers are broke, okay? Because they don't like to work hard, but those parents worked hard, okay? So that wealth is going to be transferred. That's why I like Robinhood, because all those Gen Zers and Gen Xers are already on Robinhood, and then all that money is going to come in. I really like Robinhood stock. I think it's expensive, but anything in the 30s, mid 30s, low 30s, I'm all over it. I like Robinhood, and I like what they're doing. They have a new wealth management side now. I don't want to go too long, but that's one of my top stocks for the next decade. So yeah, that generational wealth transfer is coming, and it's going to mean a lot. Hopefully these new Gen Zers and Gen Xers don't blow their parents' money. You know what I'm saying? Yeah. Yeah, I mean, look, you have to look deeper than that. You got to take your political hat off and put your economic hat on. You know what I'm saying? We need a reset because the way things are going is not kosher. But do we need a sledgehammer in like a china closet? See, that's what I'm trying to say. I think it's the right thing they're doing, but I think the pace and the scope, I think it's a little too big. Yeah. Yeah, you too, my man. Take care of yourself. Be well. You too. Not only the baby room. Absolutely, yeah. There you go. See, that's my member right there. You guys learned a lot from him. But yeah. So anyway, that's where we are. Today is a red day. Red hat stays. Hopefully, on Friday, it'll be a green hat. I thought that's like I'm not trying to make a joke out of these things, but it's bad. I mean, like, what am I supposed to say? But anyway, so much love. Be safe. Stay healthy. And yeah, put a thumbs up, please. Share the content if you like it. And if you want to become a member, it's easy. Go to the website, click join. You become a member. Email me, Sergio@sergioavedian.com. I will send you the Telegram chat group link. See you guys on Friday for Power Hour.